Hello, and welcome to Smartkarma's corporate webinar. I'm Arham Jain from Smartkarma Corporate Solutions. This week, we are hosting iFAST Corporation, and we are glad to have with us the Director of Corporate Communications, Mr. Jean Paul Wong. To kick things off, we will start off with a brief industry overview presented by Smartkarma Insight Provider, Alec Tseung. Following that, Mr. Wong will walk us through a company presentation and engage in a fireside chat with Alec. We are taking live Q&A, so I will request all our audience and attendees to post their questions in the Q&A tab at the bottom of your screen. During the webinar, we will also share some links on how you can connect with iFAST and read more research by Alec, so please do keep a lookout for the messages in the chat box. But that's not all. Make sure to stay with us until the end because we will be concluding today's webinar with a lucky draw. One of the lucky attendees will be walking away today with an Amazon Kindle, so do stay on till the end for a chance to win. Without further ado, I now hand over the time to Alec to take us through an industry overview. Alec, please.
Thanks, Arham. Let me quickly share my presentation here. All right, here we go. So I will start off by giving a brief overview on the landscape of Fintech in Southeast Asia. So over the past few years, Southeast Asia, especially the Fintech sector in the region, has definitely attracted a lot more attention from investors. But if we compare Southeast Asia with the rest of countries in the region, particularly China and India, then we can see that Southeast Asia is still a bit lagging behind them. For example, over the past 10 years or so, there have been numerous fintech companies from China that have managed to go public. So it's pretty easy for a public equity investor to gain exposure of the fintech sector in China. And in the case of India, obviously there are fewer public fintech companies. But over the past 2 to 3 years, we have also seen more fintech companies from the country managing to go public, such as the fintech giants from the country, Paytm, and also a smaller insurtech player called Policybazaar in India. However, if we look at Southeast Asia, most of the fintech companies here are either still private, or part of the regional tech giants. For example, C-Money, which is part of C Limited, or the fintech business group of Grab, right? So it's still very difficult for a public equity investor to gain exposure to just the fintech sector here in Southeast Asia. And this is where Southeast Asia stands as a whole compared to China and also India. So if we go deeper, and if we look at different subsectors within fintech, which can be further broken down into subsectors such as digital payments, lending, insurtech, cryptocurrencies, and wealth tech, and so on. So they are at different stages of development in Southeast Asia. Digital payments, for example, is definitely the most advanced or the most mature one, thanks to the development of new consumer behavior online due to the popularity of e-commerce, food deliveries, especially during COVID. On the other hand, wealth tech is still relatively nascent, as the theme of fintech in most of the countries here in Southeast Asia is still very much about solving the problem of underbanked or unbanked population, rather than helping people or users make better investments. But we believe as the region further develops and grows, given the young population and given the rising middle class households, the demand for having access to investment products, channels, and advice will only grow over time. And if we further compare the development of fintech sector among different countries within Southeast Asia, then without a doubt, Singapore is a leader across all these subsectors or verticals. For example, when we talk about insurance, on the one hand, so we're talking about micro insurance or how to encourage more people in countries like Indonesia to buy more insurance products. But on the other hand, we also have Singapore, where the insurance penetration rate is already comparable to that of Japan, which is one of the highest, which is one of the highest in Asia or even in the world. Right? So the same goes for wealth tech here in Singapore, as people generally tend to have more disposable income in the country. And so obviously they also want to have better access to different investment products and advice. And that's why Singapore has been a regional hub for fintech development in the region, further taking advantage of the talents here and also the regulatory framework available in the country. And we believe this trend will only continue going forward. So I will stop here. And that is a very brief overview of fintech in Southeast Asia in terms of how that compares to different other countries in Asia, such as China and India, and how different subsectors within fintech compare to each other in Southeast Asia, as well as how different countries in Southeast Asia actually compare to each other. And without further ado, let me pass it to actually Mr. Wong from iFAST, which is one of the very few listed pure play fintech companies here in the region that is exactly headquartered in Singapore. So, Mr. Wong, please.
Yes, hi. Good evening to everybody, and thank you, Alec and Arham as well, for having iFAST tonight to share more about the company. So my name is Jean Paul. I'm from iFAST corporate communications team, and I'll be sharing more about the company. I'll try to keep it short so that we have a bit more time for the Q&A. I'll just run through some of the key summary points that the company has shared recently with shareholders and investors following the 4Q 2023 and full year 2023 results. So in 2023, our net profit increased substantially by about 340% year on year to $28.3 million. And that's on the back of 22.8% increase in our total revenue to $256 million. So this improvement in profitability was driven by the initial contributions that we have started to see from the Hong Kong e-pension division, as well as generally improvements in our core wealth management platform business. So at the end of 2023, our assets under administration, which is a very important metric we share every quarter with investors, that reached a record high level of $19.83 billion. And that's helped by net inflows of $2 billion throughout 2023. And iFAST Global Bank, which is the bank we acquired in the UK, the positive development there is that the customer deposit amounts grew 53% quarter on quarter and 257% year on year to roughly about £213 million, so roughly equivalent to about $358 dollars as at end of last year. And that contributed to our higher net interest income as well. So as part of our 3-year plan that we've been sharing with investors, we target to make solid progress as a global digital banking and wealth management fintech platform. We've been emphasizing on the truly global business model. We feel that that is an important pillar of our vision going forward, and it's going to be helped to a large extent by our bank in the UK. Secondly, as part of the 3-year plan, we want to accelerate Hong Kong growth and deliver effectively on the e-pension services. And thirdly, to effectively develop innovative fintech services that are complementary to digital banking and wealth management platforms. So on an overall basis and barring unforeseen circumstances, we expect 2024 to see robust growth in revenue and profitability compared to 2023. So the next point, the e-pension division in Hong Kong, we've been sharing that it's going to be an important growth driver this year and also in 2025, while our wealth management platform, which is the so-called core business for us, that's expected to continue to show healthy progress as well. We expect IGB, our bank, to post a reduced loss in 2024 compared to last year, IGB is targeting to break even by 4Q 2024, and that's going to be driven to a large extent by growth in net interest income as the deposit base continues to grow. So we expect the iFAST Global Bank to become an important growth driver for the group in 2025 and beyond. For the final dividend for 2023, subject to shareholders' approval at our upcoming AGM in April of this year. So the directors propose a dividend of 1.4 cent. So that would that's similar to last year as well. So on this chart, it kind of reflects our history from the year 2000 all the way to now. So our AUA has been growing pretty well in the last few quarters after a more challenging period, especially starting from end 2021 and 2022. So our AUA hit a record high, as I shared just now. So the difference between the colors would be, firstly, the blue part is our B2B business. So the business-to-business platform, and the B2C is represented by the red color. And the contribution is larger on the B2B side, roughly about 70%, and B2C is about 30%. In terms of net inflows, as I shared just now, we hit $2 billion in 2023. So that's slightly lower than the number in 2022. And in terms of gross subscriptions, a very similar trend. We did $4.5 billion in terms of unit trust subscriptions in 2023, and that's lower than 2022 as well. I'll just run through some of the other points. So I mentioned about the 3-year plan, but I won't go through the details because I've shared that already. In terms of the ecosystem that we're trying to build here for the last 23 years, it's really to connect the various product providers. So in the early days, that would be a lot of the fund houses or the asset management companies, because we started off as a unit trust platform. But over the years, since IPO in 2014, so in the last 9 years to 10 years, what we've been doing is to add more products. So basically, we're working with more product suppliers and counterparties. For example, the banks or the bond dealers, when we started to provide bonds to our customers. We also connected to various stock exchanges, for example, SGX and the US exchanges and so on. So that's where we started to provide stocks and ETFs to our clients. And of course, we have other services like insurance and margin financing, for example, in more recent times. In terms of the customers, right? So like I said, about 70% comes from the B2B side. So that's the blue color. And on the blue color, it's a very scalable platform, because essentially what it means is that we're empowering over 680 companies in the B2B side to do wealth management services for clients in the various markets that we operate in. And we don't need to pay for these advisors because these belong to the 680 companies. So there's about almost 13,000 advisors on the B2B platform today. B2C is more straightforward. It's our direct-to-consumers platform. So we call it Fund Supermart in the early days. In recent years, we've rebranded it to FSM1.com. Let me just maybe share a little bit more very quickly on some of the things I've been talking. So on the bank side, essentially 3 main business divisions. The personal banking division is like a B2C platform. It's very new. The initial results that we've been seeing since launch last year is pretty encouraging. There are customers opening accounts in various parts of the world. And we hope that that will continue. And of course, we also hope that the deposit amount per client will also continue to increase. The DTB is very B2B, so I won't really go into the details now. And then, of course, when we bought the bank, the key business that was profitable was what we call the Easy Remit. So it's a remittance business, essentially. And of course, the second key thing besides the bank in recent couple of years would be our Hong Kong e-pension. That has contributed, that has helped a lot in terms of the Hong Kong performance. So we've seen a large increase in profit in recent times, in recent quarter. And we will expect those numbers to continue to contribute on the profit before tax side for Hong Kong in this year and as well as next year. So what we did was to provide some guidance, some targets to our shareholders in terms of those numbers, which is on this slide. As you can see, we shared those numbers in 2022. So for the year of 2023, we have essentially managed to hit those numbers. But But what happened was for 2024 and 2025, we just recently revised those numbers as we have greater clarity on the progress of that project. And while the revenue numbers in terms of targets for 2024 and 2025 have been reduced, the PBT or the profit before tax have remained the same for 2024 and 2025 targets. Maybe just one last point. I won't go through the financials because perhaps some of the investors who are in the call today may have already seen some of those numbers. So I just wanted to also share that what we're trying to continue to do consistently and continually is to improve this fintech ecosystem that I shared just now. So one example would be this bond supermart launch that we're talking about in the last results presentation. So in Malaysia, we have obtained approval in principle from the regulator to be a recognized market operator, or what we call RMO. And essentially that fits into the vision we have, which is to build a bond kind of marketplace for customers to buy bonds in a very transparent way, almost similar to how maybe investors are used to doing it for stocks. But of course, it's not a bond exchange per se, but the idea, it's very close to that in the sense that it's a bond marketplace and customers can transparently see the prices. If they're happy with it, they can start trading in the various bonds. They don't have to wait for the bankers to get back with the prices, which is typically how it's done today at the various banks. So I think that's a good example of what we mean by complementary services that can help to strengthen our ecosystem. Yeah. So perhaps I'll just stop here in the interest of time, because what Alec and Orham said, I'm more than happy to take the questions that we have from the various participants. Yeah. Thank you. Back to Orham.
Right. Thanks. Thanks, Mr. Wong. Yeah, thanks for the very concise summary about the company. Just before opening for our fireside chat, just a reminder to all the attendees here today as well, that in case you have any question, just don't hesitate to ask. So take the opportunity to ask Mr. Wong here today. Just please write it here. I will try my best to ask Mr. Wong each of the question on your behalf. Actually, I think there's a question already. So from the attendees today. So Mr. Wong, so is it possible to provide a percentage split in terms of the AUA among the 5 markets that you have indicated in the chart in your presentation? I think if I remember correctly, I think Singapore has been the biggest, has taken the biggest share in terms of the AUA. But yeah.
Yes, Alec, you're right. In terms of AUA breakdown by countries or by markets, Singapore is where we started in the year 2000, and it's still the largest contributor, about 72% contribution. And we then, expanded to Hong Kong and Malaysia in the years of 2006 and 2007. So they are also not very new markets. I would say those 3 markets are the core markets, but the relatively new one, which is relatively small, would be UK, and of course China as well. So UK and China is less than 4% contribution. And to extend a little bit further on your point, in terms of products breakdown, we started off as a unit trust platform in Singapore in the year 2000. So that continues to be the key contributor, 63% contribution. And the more recent changes that we've done, it's from the year 2016 onwards. So about almost 7 to 8 years ago, we started to expand the products range because we felt that that would be crucial for us in terms of building this wealth management platform, in terms of giving more choices for clients. But it's not just this, more products for the sake of just more, but it's also very carefully curated. So we look at relatively simple products for customers and advisors to understand. So stocks and ETFs would be a good example, but of course bonds as well. And as you can see, stocks and ETFs contribution today is about 20%, bonds is about 11%. And before we acquired the UK bank, we don't have any banking license in the group, but we've been accumulating cash AUA, which is now about 6% contribution. And the reason is because for our wealth management business, our customers need to put in cash first before they can start to trade. So it's a pre-funded business model. So it's not, a stockbroker's contra model, for example, that, maybe some customers are used to seeing in Singapore. So that's why we already have 6% cash contribution.
Yeah. Okay. Just back to your point that you just mentioned just now, that the company started as a unit trust platform, and now, I mean, I think back in early 2000 it started as initially as a unit trust platform, and then it gradually has been transitioned into currently a fintech company with an ecosystem play, right? So, and for me, I'm just curious to understand, the how you see the change in the landscape of overall wealth management sector or fintech sector here in Asia over the past 10 to 20 years, since I don't think there are many companies out here in Southeast Asia that have such a long history, right? Or that has survived all these years, right? So yeah.
Yes, yes, it's an interesting point, because when we started in 2000 in Singapore, we started with a B2C platform that was called Fund Supermart. So it's a supermarket of funds. And that's really how we started. And we were competing then with the banks, because in Singapore, customers were being sold unit trust at the banks. So back then in 2000, the thinking was you need to sell unit trust to customers. You need to tell customers what they need to buy. So that was the marketplace thinking, as opposed to what we thought should be the case, which is we need to give the ideas and the choices, and then it's up to the customers to read, decide, compare, and then buy the funds. So back then in 2000, in Singapore, the typical way for banks to sell the funds would be to just curate a few funds, look at the flavor of the month kind of products, and in those days that would be the technology funds. So they were selling like hotcakes back then in Singapore. When we created Fund Supermart in the year 2000, because we wanted a research philosophy to guide us in terms of the advice we give to customers. We also knew that back then, technology PE ratios were just going wild. In fact, a lot of loss-making tech companies were just basically just selling their stories, not really the strength of their companies or business models. So we were careful to tell customers that they should be looking at a diversified portfolio, your Asian equities, your Asian bonds, things like that. So that's how we really started. And I guess in terms of the biggest lesson is that throughout the 24 years we've been operating, there's always some form of competition. But that doesn't stop us from focusing on what we want to achieve. And I think what we want to achieve is captured in our mission statement, is to help investors invest globally and profitably. So how do we do that? Have the research team of analysts in iFAST in the different markets, writing on unit trusts, on bonds, and so on. And we hope that those help investors to know what they can do. And we also, provide content like videos. We provide tools on the website and the apps like Fund Selector, where they can compare the performances of the funds, things like that. So what has really changed is that competitors always remain, but what has changed is that the types of competitors have changed. So in the early days, we were competing with the banks. We still see banks today as the main competitors because, when it comes to cash, for example, obviously they are the biggest players in the whole ecosystem in terms of gathering cash from, customers. But, in the last 3 to 4 years, one of the competitors that, a lot of people were asking us in IR meetings would be robo-advisory companies or the Chinese stockbrokers. So that was a reflection, I think, of the market sentiments and trends in the years 2020 to 2022, for example. Then when markets turned sour, then some of these competitors then just got a bit more quiet as well. So we're used to the competition. So we're just, I think the biggest lesson is to just remain focused, like I said, on what we want to achieve. So that's really to, the mission statement, but also to strengthen this ecosystem and the global business model that I also alluded to. Yeah.
Got it. Yeah, makes sense. Yeah. So you mentioned, so the company started as a unit trust platform, the main sort of platform being the fund supermarket. And now the company is expanding further into bonds by starting this platform called Bond Supermarket firstly in Malaysia. And so there's one question. So there's one question from the attendees today that, will the bonds supermarket facilitate trading in bonds that have been traded globally? Like how does the company see this platform going forward?
Yes. So in the last few years, what we have created is a bond supermart portal, but it is a non-transactional portal. So customers cannot go to bond supermart to buy bonds. So it was a purely content-only website. So customers can go to bond supermart, they can learn and read about the bond articles that our bond analysts write on. So these are your wholesale bonds, your government bonds, your GABIs, in the various markets like US, Singapore, and so on. And there were a lot of video content, so they can watch our analysts and even our industry guests talk about bonds. So that's how we've been doing. But what we wanted to achieve is to make bonds supermart transactional. So when customers read the content on bond supermart, all the way to today, what they cannot do is to transact. So what they need to do is to go to our B2C websites like FSM1 to then trade into the bonds. Or they can go to their B2B advisors and then go to tell their advisors that, hey, I read something interesting on Bond Supermart. Do you have this bond? Can I buy it with you? So things like that. But what's happening this year after we announced in principle approval from the Securities Commission in Malaysia is that this Bond Supermart Malaysia entity will eventually be the platform where it provides that marketplace. Then it basically comes with that transactional capabilities eventually. So that has not happened yet, but it is something we want to achieve. And in essence, what we wanted to do is to offer bonds to customers to be able to transact in those bonds, real time, looking at the prices on the if they want to buy or if they want to sell. Hopefully, they will be able to see the depth of the market, meaning the liquidity, the number of participants, and so on. And the advantage to customers would be that there's price transparency. I think that is one major problem with bonds all these years. There's just it's so opaque. If you want to buy a bond from the bank, because they have to get the codes right from the counterparties and so on. So we want to change that. We want to make it transparent so that it becomes vibrant. It becomes very liquid. And I think the question also from our investor is, does it mean that it's only Malaysia? The intention is no. It's also to enable the customers in the various markets we operate in with the relevant licenses to also offer that bond marketplace capability. So perhaps in the form of API connectivity kind of access to the license entity in Malaysia. Eventually, of course, when this goes live, it's not just open to the iFAST subsidiaries to offer it to the customers. It's also to other financial institutions in the marketplace to also connect to Bond Supermart so that they also can offer bonds in that same transparent manner to their customers. So that's going to scale it much further for us. And of course, it also provides a lot more liquidity as well for us. Yeah.
Yeah. Okay. Yeah, I was going to ask if the same question, if Bond Supermarket is only going to be targeting Malaysian investors rather than more globally. I guess my next question is when investors talk about like Southeast Asia, right? Indonesia, Vietnam, they have been like recently in the past 2 years, right? These are the most popular and hottest market in Southeast Asia. Everybody's trying to do something there. But when I look at the geographical like coverage of iFAST, right, it seems that iFAST hasn't really been doing much there. Is that the plan all along, or like and does the company have any plan to do something in these two markets within Southeast Asia? Yeah.
Yes, I think every now and then we do hear, interest from maybe potential business partners on collaborating and so on in new markets, and that would include some of the markets in Southeast Asia. But I think for us at the management team level, we want to also be clear on the priorities that we have set. So I think the 3-year plan in a way sets that for us. Because one of the points in the 3-year plan is to build a global business model, but at the same time, that does not mean having to operate in just more markets for the sake of it, because that also stretches our resources. And at the end of the day, it has to just make sense for us to want to operate in a certain market, because can we leverage on that experience and that platform knowledge that we have built, in the last 24 years? How are the margins like? How's the competitive landscape like in those various markets? So those would be, a few considerations. So I think building a global business model for us, via the bank acquisition actually opens up a lot of opportunities for us to expand globally without having to operate and set up new offices. Because when we look at the numbers in terms of the account openings at iFAST Global Bank that we have launched for the last almost 1 year, we find that those global accounts come from many different parts of the world. Almost 30%, of course, from the UK, which is the home market of our bank. But the remaining 70%, quite a number of them from the various Asian markets we operate in, as well as markets that we do not have a presence in. So I think that is the interesting part of doing a truly global business model. Is an example of what we're trying to say, that you can have a truly global business model, and you don't have to set up offices in many different parts, because that could add to the costs. And investors will be questioning us on the P&L as well, if that's the case. So the main thing, therefore, is to just be clear for us on how we can build that truly global business model, and also, I think, at this point of time, to really focus on the 3-year plan pillars. So the other one would be to continue to ensure that we're part of this very large project in Hong Kong for e-pensions. We need to make sure that we deliver that properly. So we don't want to overstretch, with M&As here and there, unless, of course, there's a very unique opportunity that comes along. But in our wealth management space, as you alluded to, Alec, not many players in this space that could be interesting acquisitions as well, because it's a very unique business model. There are not many equivalent players that have this kind of business model in Asia. Of course, in the USA, Australia, and the UK, there are platforms, business like ours, but not so much in the Asian landscape.
Yeah, exactly. So yeah, exactly. I want to also touch on e-pension, but before going there, let me address one of the questions from the attendees today. So that is again directing at the bonds market. So the question is asking whether those bonds will be available for more mass market retail investors, or only accredited investors.
Yeah, currently today, in Singapore, if our customers want to buy, it's a mixture of both bonds being available for retail, and also, of course, secondly, those that are available only for accredited investors. So when we launch the transactional capabilities for the bonds format or the bond marketplace, we will come up with more details eventually. We're looking at perhaps a later part of this year, in the second half. So we'll come up with more details. But currently today, if you look at how we're doing it, it really depends on the kind of bonds. So some bonds are available just for AIs. So that's the current landscape today. Yeah.
Okay. So back to my question about e-pension, the platform in Hong Kong. So I really think that a big driver of the company's stellar performance last year in 2023 is thanks to the e-pension platform, the success of the e-pension platform in Hong Kong. So, and I believe the importance of this platform is not only about driving revenue growth, but also having a more diversified and not so volatile revenue source for the company that is not tied to AUA, or that's not tied to the broader capital market environment, such as trailer fees, right? So is it possible to share maybe a rough percentage that we can expect this platform to contribute to the company's total revenue going forward in the next few years? Yeah.
Yes. I think when it comes to the e-pension, there are a few players involved. We're not the main one behind that consortium. So we are just one of the prime subcontractors. But what we wanted to do is to balance the information that we can share. There's a lot of confidential clauses related to this project, because it's related to the EMPF, so it's a sovereign entity in Hong Kong. But to answer your question, Alec, what we have been able to do, balancing this act not so easy, but what we've been able to do is really to just give some of the revenue and PBT targets. Unfortunately, not over the course of so many years, but what we've done is for 2023 to 2025. So if you look at those numbers and you extrapolate from there on what that could mean going to beyond 2025, you can assume that it will eventually at some time plateaued to a certain level of revenue. And you can extrapolate, how that could then change in the next few years beyond 2025. Maybe I should add at this point that this is a 7-year contract with the client, with the sovereign entity in Hong Kong. I mean, if we could, we would, give, more colors for a longer period, but it's not possible. So, but if you can extrapolate, because based on 2025, you would have seen some of the numbers I shared just now on PBT and gross and net revenues. And by 2025, what the EMPF has already mentioned publicly is that there's a hope that the onboarding of all the various trustees in Hong Kong, that would be the various fund houses and the trustees, right, up to 12, would have been more or less complete. So if you do that extrapolation relative to our 2025 numbers, that should give you a good maybe sense of what would happen after 2026 onwards, and then assume that there will be a total duration of 7 years. And beyond 7 years, there's a possibility of 3 more years. But that, of course, is the choice of the client, the sovereign entity. It's up to them to decide whether they still want to use this consortium to deliver the services and so on. For us at iFAST, we just want to make sure we do our job well, which is to provide the pension services very efficiently. We don't want to, give a lot of problems to members and so on. So we need to rely on our Fintech, our IT in-house team to deliver that. I think in a way, thankfully, we built IT from day one in the year 2000 in-house. So I think that's given us a lot of reassurance and control on what our IT can do in terms of the various services, including for this pension project. Yeah.
And in terms of the profitability, like can we assume this is very much like as like platform as a software play, like where once the platform is built and launched and the cost of maintaining this platform is relatively low from the company's perspective, and so the profitability will only increase further over time with more clients signing up to it.
Yes. So relative to this point, once the onboarding of all the Hong Kong trustees onto the EMPF happens in 2025, which is the stated timeline so far by the authorities, then that should more or less give a good sense of some sort of the operational leverage or that we could see. Because there's a certain predictability in terms of the top line, simply because this is not, as you mentioned, Alec, earlier, it's not correlated to market volatility. Yeah, so it's a bit like a IT solution revenue type of structure. So it gives a lot of predictability in terms of the revenue numbers for us. So to answer your question, yes, because in terms of the cost, there should be some scalability for us or leverage for us to enjoy once we have built the necessary resources, including IT and the hiring of headcounts, which is currently still ongoing, because as of now, the onboarding hasn't started. So that's why the resources and for IT and headcounts continues. But once the onboarding, it's kind of like let's say reaching more or less completion point. Let's say if it happens by end of next year, then there should be some of that leverage that we see. But 2025 numbers could perhaps give a certain guide in terms of what that could mean. The other project in Hong Kong that came up interestingly for us is the other pension scheme, which in Hong Kong is called the ORSO, or what we call ORSO. That one, it could start to give us certain revenue numbers by first Q of next year. And that project is a little bit different from EMPF because that is correlated to AUA numbers, and therefore that could be related to market volatility because that will impact the AUA levels. But having said that, it's a good thing for us because I think once we are in this game, in this e-pension services business, and we can demonstrate value to the clients, potentially we could be, having more businesses and opportunities. Yeah.
Okay. But before moving to my next question, so there's one, I think, interesting question from the attendees, and that is, who are the principal shareholders of iFAST?
Yeah, so iFAST's main shareholder is the chairman and CEO, Mr. Lim Chongchun. He founded the company in the year 2000. He used to be in research. He used to be doing research work in the 1990s. And he plus deemed interest would be about 22% of shareholding. The other large shareholder would be the previous SPH, formerly known as SPH. Today they are known as Cascaden. In terms of the information in our shareholders list, you will see it as CP. So basically, the investment arm of Cascaden, and formerly known as SPH. So they came in as an investor in iFAST from the very early days. So they've been a very long-term investor. But as some of you who follow our shares closely and the announcements closely, there's also been some selling from them. And of course, there are other few individual shareholders who are relatively large as well. But beyond that, no major substantial shareholders per se. Yeah.
Okay. Let's move back to just on the company's strategy. So I think 2022 is a big year for the company, where the company acquired this UK bank, DCF, and now has been rebranded as iFAST Global Bank. At the same time, I think the company also decided to exit the onshore business or the platform in India in 2022. And that, again, like India has also been one of those most popular markets for global investors in Asia, and the company deciding to exit the business in India in 2022, that again seems to go against the sort of market conviction, right? So what is the rationale behind this, right?
Yes, I think it's an interesting example that I kind of alluded to, in terms of economic development or policies, or in terms of, the stock exchange returns, they could be interesting for a certain country. But when you're going in with our expertise in wealth management and so on, there has to be a good fit. Does it, apply in terms of margins and opportunities for our kind of business? We don't want to, move into other areas that we're not good at. So, we thought we had a wealth management, strength when we entered India. We had an associate company back then there. But what happened was the regulators in India changed the regulations on the pool account policies for various financial institutions, including platform businesses like us. And it happened in a very short time. So it didn't give a lot of time for us to even have a certain runway to see whether there's room for change and so on. So it happened quickly, and it really was a death knell for that platform business in India, because our business is reliant on having customers sending money to us in the pre-funded cash account concept that I mentioned just now. If we can't do it that way, and we have to have that cash from customers routed to a bank, for example, then it's a very inefficient way of doing business. I mean, I'm just kind of saying what that implication was in terms of that regulatory change. So it didn't quite make sense for our business, because today our customers send money to their cash account directly to us on the iFAST, and they can then use that money very quickly to start investing. But if that model is not even allowed, then this just doesn't make sense for us to operate that wealth management business. So I think sometimes regulatory changes do happen, and they can be a dampener in terms of the business.
Yeah. Okay, I think just for the interest of time, I think let me ask just one final question here. I think that's also on top of every single investor's mind. So in terms of company valuation, so right now, I think thanks to the stellar result that the company has managed to report in 2023, the company's valuation is trading at 70 to 75 times price to earnings. Like, in my opinion, that's definitely not cheap, right? So how should we see this? Like, how do you justify that?
Yes. I think for us, firstly, one way to maybe perhaps few considerations. I would say one, it's also the earnings growth potential, let's say over the next 3 years, because of the various catalysts or the various initiatives that we have. I think that could help the business, going into this year and even going forward. Part of our iFAST 3-year plan, the e-pension revenue contributions that have started, and also the UK banking break-even point that we shared by 4Q of this year, and in 2025 starting to contribute to us more meaningfully. Those are new initiatives, and I think it reflects the kind of mindset that our CEO and the management team have in iFAST. It's a 24 years old company, but we're not resting on our laurels. We're forever thinking of how we can improve the ecosystem and capture more clients and add value to them. And so it's really a 24-year-old company with a very fintech growth mindset. But what we do have is a track record of profitability, unlike a lot of new fintech players that Alec you shared in Southeast Asia. They've been loss making like in the robo advisory space for many years since they started. So it's not easy, but I think we've built a certain amount of scale in terms of AUA. We've built scale in terms of the B2B connections. So I think that makes us quite unique because when we talk about competitors like stockbrokers, a lot of them are just focusing on B2C customers. But for us, I think iFAST, over time, it takes a lot of patience to actually build that B2B ecosystem of almost a few hundred companies, almost 700 companies that we have built. So I think it makes iFAST therefore quite interesting and unique. And maybe that's one way to look at how to compare us to another stockbroker or another platform or another Chinese player as well, which may come with its own set of challenges, of course. So and also I think our truly global business model, hopefully that's an area where it's unique. I think investors are also curious over the last few quarters by what we mean. I think recent times when we share the deposit base, how it's grown in the UK bank, they start to see some, concrete evidence of what we're trying to say. And, going forward, that should improve. And it's a relatively less competitive space, surprisingly, because no banks are actually, some of them say they want global customers, but what they're essentially saying is they're targeting very high net worth customers globally, with subject to very stringent AML requirements to open accounts. For us, we're saying that it can be, retail clients anywhere in the world. And we're, in that sense, we're quite unique. And if you look at a 3-year horizon, then perhaps P ratios forward-looking maybe a bit better, but maybe your PEG ratios could be more interesting as well.
True. I think one thing to add from my side is just to finish up the fireside chat. I think because we are a bit overrun, is also I think it's very interesting to look at the revenue mix of the company, where I think over 75% of the revenue is recurring. So that's very sticky, and I think that's very interesting to. At least for me, like to look at all these fintech companies, right, that focus on B2C. So, and since you are focusing more on B2B, it's very recurring revenue, very sticky. I think that's super interesting.
Yes, that's right, Alec. Yeah.
Thank you very much. Arham, I think we're a bit overrun, and I will just pass it back to you. I think there's some questions that we couldn't address from the attendees. Maybe is there a way maybe we can address them over email in the future?
We could do so as well. Our attendees, who they can also leave these questions as discussion notes on Smartkarma. Okay. So that's another way, or they can even contact JP and Alec, you, and even Keith through Smartkarma as well. I've shared the profile links over there, so perfect. They could do so as well. Yeah.
Right. Thank you very much.
Thank you for the participants for their questions, and thanks to Alec and Arham for having me.
Great.
Thank you.
Thank you so much, Alec, for some of these very interesting questions, and a big thanks to Mr. Wong for a detailed insight into iFAST, the challenges that they're currently facing, and at the same time, the opportunities that we heard for iFAST, not just in the region, but also globally. Thank you so much for being here today. And now, to add an exciting twist to our conclusion, we have a special treat for our live audience today, and it's time for the lucky draw, where one of the live attendees will walk away with an Amazon Kindle. So, and the winner of our lucky draw today is David So. Congratulations, David. Please do look out for an email from our team on how you can claim your prize. And thank you everyone for attending the webinar today. We'll see you all next week on our next corporate webinar. Thank you, everyone.
Thank you.
Thank you very much. Thank you.